And Washington, D.C. was unusually quiet this week with Congress on recess, but that did not stop the White House from looking for new ways to get tax reform done. Fox Business is now reporting that the Trump administration has reached out to Democrats, specifically the moderate Democrats, the Blue Dog Coalition, in hopes of getting bipartisan tax reform passed. So what do Republicans think of this? Joining me now is one of the key figures in getting tax reform passed on Capitol Hill, Republican House Ways and Means Committee Chairman Kevin Brady. And Mr. Chairman, it's good to have you on the program this morning.
Thanks, Maria.
Thank you so much for joining us. So how do you deal with the fact that you don't have any Democrats working together with Republicans? Now you have been out and about working really hard all month. I've been watching you, and I know you are knee-deep in tax reform, but you don't have any participation on the left.
Well, so we've been having discussions in the House with our centrist Democrats for some time, and really talking about, so how do we deliver middle-class tax cuts? How do we get the economy moving? How do we stop companies from taking their jobs and their research and their manufacturing overseas? These are good, healthy discussions we're having with them. So we're hopeful they continue. We want them to bring their ideas. We think they can be hugely helpful in this process. And I really applaud those Democrats who have an open mind, who are bringing ideas to the table. I think it's important.
You know, the Democrats like to say the Republicans want to cut taxes for the rich. That's been the rhetoric that keeps coming, and it's happened this week again. But the fact is, don't the highest earners pay most of the taxes in this country?
They do. They pay an extraordinary amount.
Like 90%.
Yeah, it's a huge number. It's so unbalanced in all this. But here, look the last eight years. I will just tell you, inequality in wages grew because we didn't have a tax code. The regulations were pounding on people, you know, the Fed's decisions and all that. And so I think the best way that we can create more income equality in America is to simplify the code, get this economy moving, give people a chance to move up that ladder, and that's what this is about.
So let's talk about what you really would like to see happen, and then I want to get into whether or not the timeline is realistic. You've got this postcard, simple, fair postcard tax filing. You think the average guy and gal out there will be able to do their taxes on a postcard, even though right now that tax code is 70,000 pages? The
truth is yes. In fact, because we looked at this, better than 9 out of 10 people will be able to use a simple postcard-style system to file their taxes, and it's because we do some key things. We flatten out the brackets from 7 to 3. We lower the rates at every level because it's important that Americans keep more of what they earn. We protect more of the first dollars that families earn by doubling the standard deduction. That's really important. If you're a young person starting out, if you're a middle-class family pinching every penny, if you're an early retiree, boy, that really matters. And then we even go deeper to help people save and invest, really critical. And we keep on the postcard the items that most families rely on, the home mortgage deduction, because your home, as you know, is probably the biggest investment most families make. Charitable deductions. We want more of charitable giving to your church or to your cause. We keep the child tax credit. In fact, we muscle it up a little to help, because it's expensive to raise kids these days.
Yeah, sure.
And then we also keep the college tax credit, but we're tweaking it a little to make sure that students going into technical skills like welding and plumbing and air conditioning, these are important skills, but that's expensive too. So we want families to be able to get that help doing it. So on the postcard, we really keep the items that most families count on.
And of course, we're talking about a corporate rate possibly in the 20s. Right now, we've got a corporate tax rate of 35%. You'd like to see that in the 20s?
Yeah, I do, and as low in the 20s or lower as we can get, simply because that's what we have to do to be competitive. Since President Reagan reformed the tax code, our competitors have left us in the dust. All of them have lowered their rates. We're still the highest rate now among our competitors, and they're still competing. They're still lowering their rates. So, look, we've fallen behind, 31st out of the 35 biggest competitors, nearly dead last. So our goal in tax reform is to leapfrog America from nearly dead last into the top 3. So we want to be the best places on the planet for that next new job, next new research facility, next new manufacturing plant.
That's why some companies are picking up and they're moving their headquarters to Ireland, because they've got a 13% tax rate or something there. But when you look at the actual effective tax rate for large companies, I'm talking about small business, large companies, they're not paying up to 35%, right? So do you have to strip out the deductions in order for them to actually see the fair, effective rate that they're going to pay?
You do, because our code is so complex, and because we, America, one of the few countries, we tax you, your business here, we tax you in effect abroad, so we actually punish you when you compete and win as a company around the world, we actually punish you to bring your earnings back to be reinvested in America. That makes no sense. So we say stop doing that. We're going to tax the United States. We're proposing a zero tax rate to bring your dollars back to our communities here in America. It will make them incredibly competitive worldwide, which creates jobs back here at home.
So you're talking about, like, for example, on Apple, who has $250 billion overseas. If they want to take some of that money back here, they won't pay a tax.
They will not. In fact, take Apple's and then make that 10 times bigger. That's what we've got in stranded earnings overseas.
Like $3 trillion.
It is a huge amount and growing geometrically. Got many of the sales out there. So we think being able to deploy your capital and those earnings where it can most make you successful, usually in the United States, is incredibly good for middle-class jobs.
So we're talking about a 0% tax to bring the money back, and then we're talking about possibly a 22% tax on corporations.
Yeah. So key point here. So 0% rate going forward with those earnings. We've proposed sort of a dual rate for the $2.5 trillion that is stranded overseas today. So a low 3 to 5% rate on hard assets. You've built over there, you bought a company with those things, but 8 to 10% in that range for the cash or cash equivalents to bring that back over time. And so we recognize there's a difference in those stranded earnings overseas, but we want those coming back to the United States.
Really?